2023 was a phenomenal year in the stock market. Let's take a look back at 2023. Let's take a look at the top stocks and the major events that happened in the last year. Let's go. All right, guys. The NASDAQ, 44.28% increase so far this year. S&P, 24.34. The Dow, which has been hitting all-time highs, only up 13.1%.
Dang.
Now, for a large chunk of the year, all the gains of the S&P were basically the Magnificent Seven.
Correct.
That has recently changed, and now the other parts of the stock market are up a lot as well.
Right.
So I think if you exclude the Magnificent Seven, the S&P is still up 12 or 13% for the year, which is still a great year.
Yeah, it's a really good year especially compared to what it was in October when it was like 2% with excluding the Magnificent Seven.
October 26th to now, we're on our 8th week in a row of gains in the stock market. Okay, so I don't care what you say, that's a lot.
Yeah.
The Dow from a overbought position is very overbought. That's hard for an index to be so overbought. You look at a company like Intel, had a low of $25 at 50 bucks right now.
Yeah, it's crazy.
So let's take a look at the top stocks of 2023 right now. Guys, no shocker, NVIDIA is number one, up 237%. Meta's up 195%. You got to remember, November 4th of 2022. A mere 13 and a half months ago, the stock was at $88 per share. It's now at $350 per share. Talk about a turnaround. And I want to remind everybody that back then, the story followed the stock price. Mark Zuckerberg's an idiot. He's past his prime. Facebook is dead. And watch our videos back then. We're like, how can they say Facebook is dead? It's still growing. How can you possibly say that? But it was still the conversation. Why? Because news follows the stock price. That's why now all the news is so great for all these companies. Royal Caribbean, cruises were dead. And you look right here, Royal Caribbean and Carnival Cruise Line round out the top six, 160.9% and 130.9% for Carnival Cruise Line. Builders First Source, 160%. Uber, 150% growth.
It's big. Big
time growth for Uber. Pulte Group, home builder, AMD, following the whole AI chain, Palo Alto Networks, Tesla's up. I think Tesla was at $101 per share, $108 per share to start the year off now. They're at $255. Broadcom, Salesforce, Arista, GE, back from the dead, up 95% this year.
Wow.
Now, does this mean, guys, this is going to continue on? Not likely. It's very, very rare that this will be the case for the way it goes next year. But it could happen. There's still a lot of momentum in the market. There's still cash sitting on the sidelines. Look at Intel right here, 91% growth. 91% growth. Isn't that interesting?
Yeah.
Guys, I own Intel. Remember, don't own anything just because anybody on the internet has it themselves. I've owned Intel. I've been criticized for that. I said it's a turnaround play. I don't hear people talking. And guess what? I don't believe this is sustainable.
No.
I'm not the person who's like, see, I was right. Not at all.
This just happened in the recent 2 months.
Yeah, I'm not going to look at this and say I was right. I will not do that. I want to base my performance and I'm right on long-term progress. I'm not going to be like those other YouTube hypesters who sit there and say, look, the stock is up. In fact, I get messages from people all the time. Paul, you mentioned the stock and I loved it and I bought it and it's up 30%. I'm like, okay, who cares? One, do your own process. We're here to teach a process because your way of looking at investing is going to be different than mine, but you can apply the same principles. That's the big key here. We're trying to teach that process. All right, guys, let's look at the major events that happened in 2023. Mo, go for it.
So look at this. January 6th, you had a nearly 2% gain on the S&P. December unemployment data showed deceleration in wage growth and investors took on a sign. Okay, so that's great. Now we just get further on. January 18th. Down almost 2%. Retail sales showed that there was slowing. And you come back here, January 20th, we had a great jobs report. It's just like a ping pong ball going back and forth. But look at some of these things. Jobs report, weak GDP that was shown in April. Then you come down here, August, poor outlook in the Chinese economy. Where'd that come from? It's news that drove the day. The banks failing in March. Twice.
We had major bank failures in March, and the market just completely overlooked it now.
Look at this. You had March 7th. That was your first day, down 1.5%. March 9th, down 2%.
Can I tell you something? When you literally brought up banks failing, I thought, oh yeah, that's right. That did happen.
That. Yeah.
Completely forgot that a top 10 bank failed and two other major banks. And the only reason it didn't continue on was
We got a bailout.
The government just came in and said, listen, we're going to backstop your losses. You're fine here.
Yeah.
Does that sound like something healthy? Is it healthy that we're excited about a slowdown in the economy because that means the Fed will decrease rates or at least stop raising them? I don't know if that makes sense to me. And these are the major events that I think the banks were the major event of 2023 that got overlooked.
Yes,
absolutely. And the reason being is because people said, well, the government's backstopping us, so what does it matter if they're all upside down in these long-term? What happened there was a lot of banks took a lot of long-term mature notes when rates were lower, and then when rates skyrocket, it causes the prices of those bonds to drastically fall. So on their book, they have unrealized losses. Well, when you have unrealized losses, you need capital to offset that. Well, they didn't have the capital to offset that. That's what caused Silicon Valley Bank to plummet.
Here's another interesting one. April 27th, the market was up. The S&P was up about 1.5%. Weak GDP growth. People thought that they would cut rates early in 2024. Think about between April 27th and where we are today, December 27th, of how much chaos there was in there where people were going, oh my God, they're not going to cut rates. They're going to cut rates. It was just nobody knew what was going on. And that's the prediction that people were making back then.
Yeah, and then people are still ignoring. And again, this is not to be a fudster. It's just to say, guys, let's just think about this logically. You have big growth in car loan delinquencies. You have big growth in credit card delinquencies, as well as credit card balances skyrocketing faster than GDP. You look at those things saying, is that the sign of a healthy economy? Now, the plus side to that not healthy economy is people think rates will go down. Guys, that's not what's going to happen. If the economy is not healthy, it's a recession. We have pricing in the stocks like things are going to continue going on like gangbusters for a very, very long time.
Right.
Is that sustainable? Now,
weak GDP growth thinking things are going to get bad, not good.
Correct. Now, 2.5 years ago, almost 3 years ago now, we were warning people about these hype stocks like Tattooed Chef, Nikola, Neo, all these stocks that we sat there and said, listen, they're going up like crazy, but it's not matching the financials. And a lot of those stocks have fallen 90 to 100%. Okay. When I look at that saying, okay, were we fudsters back then or were we just using logic?
I think it's logic.
The hard part is we haven't had this channel long enough to show people that when times are looking really bad, we're optimistic, except for the fact that I own 16 companies that I didn't own 2 years ago because their stocks fell 70, 80%, and now they're in line with my desired purchases. When we were sitting there saying, Google at 150 doesn't make sense, we want it under 100, and people are like, it'll never go under 100, and they went to 83, 85. You look at these things saying, that's a big company that fell big time, and the story followed. The stock fell almost in half. The story became, oh, Google has to lay off people because things aren't going well, etc. These are the things we want to explain to you as a channel. This is what we want you to understand. We want you to get behind the whole fact that what you see, the market price is not determining whether you're right or wrong. Market price doesn't determine the actual value you're getting. Price is what you pay. Value is what you get. Over the long haul, the less you spend on value, the better you will do. The hard part, and it's a very simple concept, but the hard part is being able to go against the grain and say, I'm okay with that. I saw a tweet recently where somebody said to me, hey, Paul, I think what you do is awesome. I think you're great, but I think you've missed on a lot. My misses have been not buying into the hype. Mm-hmm. I will gladly miss that all day. Gladly miss that all day. And guess what? When I buy a stock, I literally hope and pray that it goes down. I literally have stocks that are up 50, 60% in the last 2 or 3 months, and it absolutely aggravates me. That's the mentality I want you to have. If that confuses you, please continue watching this because that is the right mentality to have. You should want stocks to fall so you can buy more of a great thing at lower prices. Investments, for some reason, are the only things in the world that people want to pay more for, and it confuses us.
Yeah.
It confuses us. It's the only place in the world where people go, great, the price is higher, I want it.
Yep.
It's unbelievable. We want to change that mentality for you. We want you to become a true investor, which means until you're ready to retire, you want prices as low as possible. You want to accumulate those great shares. Guys, any given year, nobody knows what's going to happen. A year ago, nobody would have guessed that the banks would have failed. Nobody would guess NVIDIA would have gone up 300%. Nobody would have guessed all these things that I bet you if you ask people, by the way, this was probably the biggest, as much as NVIDIA was a huge gain, I think Meta was the biggest surprise for everybody. Mm-hmm. Because literally the story behind in November of 2022 was how bad Meta and Zuckerberg were. And now it is up 195% year to date to $88 a share, and now it's at $350. And guys, another big piece of news, there's been a lot of bankruptcies this year. I think it's almost a record even from the COVID year.
Really?
Here are the big bankruptcies that we Party City. Tuesday morning, I was actually
That's
surprised when I saw that one.
Wow.
People forget about this one.
Yeah, that was a big one.
Local company, Lordstown,
Yep.
right here in Northeast Ohio. Smile Direct Club just happened recently.
Another surprise.
Rite Aid. I was driving to work today and I saw Rite Aid and I was just like, oh, Rite Aid. WeWork. The best part is, I love it how people now in hindsight say, well, WeWork was obvious. It's like,
Yeah.
oh, okay, cool. Did you short it? So it wasn't that obvious.
The interesting thing about Bed Bath & Beyond, you could still go to
By the way,
bedbathandbeyond.com.
yeah,
Overstock. Bought them. It's awesome. There's
Yeah.
like no more overstock.
yeah, isn't that
Yeah,
incredible?
it's cool.
Guys, if you're interested in hearing what we think about 2024, watch our next video about our 2024 outlook.